disappointing first quarter for Laurus Labs, with profits seeing a dip of more than 50% and margins contracting to 15%. What were the key factors at play? Let's ask the management of the company. Joining us to take the discussion forward on the phone line is the founder and Chief Executive Officer Satyanarayan Chava. Hello and welcome to Bloomberg Quint. Hi, this is Nikki. I'd like to understand a little bit about the downtick that we've seen in your margins, which currently stands the EBITDA, which has come down by 17%. What margins can be expected for Q2 FY19 and for the financial year as a whole?
There are three significant reasons why our gross margins and profitability was down. The one was a significant increase in prices of certain intermediates we purchased from China. And the second is a change in deliveries for certain products from our CMO partner. And the third one is exchange rate fluctuation. All these three contributed to lower profitability in the Q1. And we have mitigated the raw material price increases by doing production in-house. And that will be done majority in Q2, but completely in Q3. And our supplies to CMO APIs to our partner will commence from this quarter onwards. So we expect our Q1 lower results was one-off. It has no bearing on our further quarters of the current financial year.
Mr. Satya, your ARV segment, which forms 69% of your overall revenue, registered a healthy growth of over 35% in Q1. I'd like to understand what can be expected going forward for FY19.
If you see the sequential quarter, we maintained our revenues from Q4 FY18 to Q1 FY19. But we are very confident to clock around 10% revenue growth in ARV segment.
All right. In terms of revenue, HEPC business, which forms 7% of your overall revenue, that continues to remain muted. The segment, in fact, has shown a degrowth of more than 140 million over sequential quarter and 69% on year-on-year basis. What can be expected from this division going forward?
The HEPC revenues, as you mentioned, continue to mutate, and we had less revenue from API sale, but however, our profit share coming from our partner was very similar to the Q4 FY18 and Q1 FY19. We don't expect significant degrowth from this level during this financial year.
All right. Among all your divisions that you have, where do you see the maximum growth potential for this financial year?
The significant growth will come from our synthesis division, where we do contract manufacturing to Aspen as well as clinical phase APIs. That is doing very well, and we see significant growth. Our oncology API sales also will see significant growth. The only one division where it will change the profile of the company is our formulation division, which we expect FY20 will be the year where the significant revenues will come from formulations.
All right, Mr. Satya, let's talk about your capex in that case. What is the capex that you've earmarked for this financial year as against the previous financial year?
Last year we did more than 300 crores, but this current financial year we're doing around 275, 300 crores. We expect to do closer to 250 crore next financial year as well.
How about your new product lines? Any new products on the annual for the company?
In ARVs, we are completing the validation of second line APIs, which will be done in Q2 now. And in a CMO, we are adding a lot of products from our European partner. And in oncology, we are adding 2 new products. In our finished dosage forms, we filed 2 ANDAs this year, and we expect to file 6 or 7 more in this financial year. Q3 we will hope to launch 2 formulations in US.
All right, then the last question that I have for you in that case will be your promoter shareholding of the company has increased substantially to 32% from 30% that we've seen in the corresponding quarter. What's the rationale behind this, and can we expect a further rejig in the shareholding pattern going forward?
About 1.5% share from the market in May and June. We acquired because we have a lot of confidence in the business. We have a lot of confidence, and we hope to acquire some more if in the near future.
All right, Mr. Satya, we'll leave it at that. Thank you so much for speaking to us. That was the management of Laurus Lab. Well, the stock is down and out by as much as 8%. The margins seem to have been dented by some input pressures from the company. However, the promoter might look into increasing more stake into the company. With this, it's a wrap on this edition. Well, do stay tuned into Bloomberg Quint for more.